All right. Hey, everybody. Brad here. We're going to take a look at several instruments through the lens of Elliott wave theory. Hey, just right off the top, if you've been subscribed to my channel and watching these videos, I highly encourage you, strongly encourage you to join the Professor Trades Club. For a little bit more than $1 a day, you're going to get insane, amazing value on a daily basis. Plus, Armando is the king of psychology and mindset. That alone, for the amount of money that you'll be paying, it's going to change your game. If you're struggling with moving your stops, if you're struggling with blowing up an account, if you're struggling with consistency, meaning you make a bunch of great gains and then you give it all back, and then you make a bunch of great gains and then you give it all back. If these are the kinds of things that you're doing and you're frustrated, I highly recommend the club. I mean, the club is really for you if you've already got a bunch of experience. Even if you don't, but I think the club is most impactful for folks that already have experience and maybe you're struggling. You keep making similar mistakes repeatedly, and it's frustrating. I mean, because what's more frustrating than being so close to success, but then you keep failing? Death by 1,000 cuts. Sometimes you just need a little mindset and a mindset shift. And the thing about Armando's group is when you're in this environment with many other people doing the same thing, and then you've got a bunch of other positive-minded people that are starting to flip their mindset into this trader's mindset and positivity, and then they're experiencing the positive outcomes because they're following the professor and implementing the things that he's teaching. Then you start to get a group of people that start succeeding together. And then what happens is it's kind of like, people talk about sheep like they're bad, like don't follow the herd and you're just like a sheep, the sheeple. But if you're in the right group and you can follow like a sheep and improve, and actually you're following the sheep in the right direction, it's exciting. Come join the club. There's strength in numbers. Anyway, in addition to that, for a few pennies more a month, you're going to get access to the Elliott Wave Room, which is the content that I'm providing. Charts on, depending on what day it is, I'm following indices, metals, the dollar, a few currency pairs, NASDAQ, well, I already said that, ES, all the good stuff that you want to follow, oil. Anyway, that's my plug for the room. The link is in the description of this video. So don't hesitate, click the link, check out the offering, and I'll see you in the club. The other thing is I'm starting to finally create my schedule for an educational series. I'm going to call it $7 Saturdays. And for $7, I'm going to be doing some educational 1-hour sessions. As of right now, I think they're going to be on Saturday mornings. I'm just being careful before I announce this because I'm going to keep the schedule. So my schedule is crazy. So I'm trying to carve out 5 Saturdays, $7 each Saturday, 1 whole hour for beginner Elliott Wave explanations and tutorial. And we'll be able to ask questions in live, in real time during the session. And the sessions will be recorded for your future reference. Anyway, that's enough of my plug. So let's start by diving into the crude oil chart through the lens of Elliott wave theory. So here we are looking at this crazy, crazy crude oil action, and I'm just going to zoom in on what was happening last week. Without going into a long explanation here, I'm just going to give you some levels, and you're going to kind of watch me create, you're going to watch me create these levels that I'm going to be watching this week. So what I'm trying to do right now is I'm just zooming in. Now you can see these white fib levels that I've already got on this chart. And the way I'm thinking of it right now is we are moving down impulsively, meaning there's not very much overlap. Now the thing is overlapping at the larger scale. Crude oil is moving in threes. It's moving in the most difficult way it can move, which is in threes. However, because we know how to measure when price is moving in threes, and that's what I'm about to demonstrate to you right here, we can develop an edge. Now look, we already have a bearish bias as we have had for weeks. I've been bearish actually for months, probably a year in oil. So I'm much more interested in taking the short scalps, although we're non-denominational in terms of direction. So whatever direction we think it's going, that's where we're going to scalp. We are scalper day traders inside of the Professor Trades Club. You got to check out his channel, The Professor Trades, on YouTube. You're going to get more free guidance, just like you are from me. It's incredible. So soak up all this free content, and then when you really want to get the psychological benefits of being in a group of like-minded people who are winning, then you join the club. When you're ready, we're going to be there. Okay, so what I would do here, this has come down, just poked below the 100, as warned. Got some good long scalps. There is a chance that this high right here is a lasting high, and we're going to head down towards this area. Now, I'm not predicting anything. I'm going based on structure and parameters. So what I'm about to do right now is give you some parameters. And the first thing I'm noticing as I look at this is moving up in a three-wave move. Meaning, tell me if you can see this. Here's a low. Here's a high. Here's another low, and then you've got another high. Now, this is a 4-hour chart. I want to see the details inside of this 4-hour candle right there. So I'm actually going to, let me just see if I can, yeah, okay, that's what I wanted to see. I wanted to see this low down here independently, because on the 4-hour chart, this high and this low are on the same candle. So I wanted to break it down so I can see the low. Let's see, so that first 2-hour candle, the low is 65.62, and the second one is 65.59. So you see, I couldn't see the true low on the 4-hour, so I had to go down to the 2-hour. Now I can see the true low, which is at 65.59. So what I'm going to do now is I want to measure this three-wave move, and I want to see how does this high relate in terms of proportions of the length of this initial move up off the low. So let me repeat that. I want to see where this high is in relation, another way to say that is in ratio of the length of this entire first move off the low. So in other words, I want to measure this move off the low, and I want to know how does this next wave up to this high, what ratio, how does it relate to this move up? Why? Because we know that price loves symmetry, and we know that price loves to unfold in repeatable patterns. So if we can measure those patterns, we can start gaining edge. So that's all you need in trading is an edge. You don't need to be right all the time. You don't need to make predictions and so forth. We just need to generate an edge. So I'm doing this right now as an educational moment. So I'm taking the fib projection tool. This one on TradingView, the tool is called Trend-Based Fib Extension. When you select the fib extension tool, you get 3 clicks. So, and I'm turning the magnet on. So the first click goes at the swing low. The second click goes at the swing high. And the third click, which is why I dropped this down to a 2-hour chart, is I need to see the exact low. And that comes in at 65.59. And I'm going to drag this over. And I'm going to put it up where it belongs at 65.59. And what do you know? Look at that. If you've been following me for any length of time, you know that my yellow fibs are what I always use yellow when I'm looking for anything moving in threes. And the typical fib levels that price likes to target when moving in threes is the 100 fib, the 1236, and the 1382. And as you can see from this chart, look how price came right up and tagged the 1382. So the way we would think of this is as an A, B, C. So the start of the ABC move is down here at the swing low. The A wave is where that first top is. The B wave is this low. And the C wave is this last high. Now, I'm going to, a lot of guys are into selling stuff and they're making these videos trying to sell you something. And get you all excited and brag about how much money they're making and all this. I'm interested in teaching you how to generate an edge. So you're going to figure out yourself how to trade yourself. And you can do it by watching others and learning. And you can do that inside of the Professor's Trades Club because there's a bunch of very talented and skilled members in there, in addition to other people that are brand new. But watching Armando, you are watching a master day trade scalper. And that's why I'm in the club, because Elliott Wave is really good at these longer term parameters. And so I'm coupling my strategy and approach and my tactics with Armando's much simpler and effective tactics. So I combine them both. So what you're seeing right here on a 2-hour chart is how this 3-wave move came up and tagged the 1382 and got rejected. Now, this bodes well if this last high, now here's a parameter, if this last high holds, then we are still in the running to see the 1618 target down below, which is coming in, just call it 63. Because these are zones, even though it's an exact fib level to the penny, it's still a zone. So anywhere, just call it 63 would be the target as long as 6818 holds. And the way I would view this is 5 waves down. So 1, 2, 3, 4, 5. So this is wave 1 of something, or it's an A wave. And this is either wave 2 or a B wave. But the idea would be coming down from this high. It's 1, 2, and then this would get you to 3. And then this pivot should hold. If this is a true impulse, meaning you're going to get a 5th wave down all the way to the lower, actually it could even, I know it sounds like crazy talk, but this could get in the 50s. I'm not predicting anything. Okay, I'm not predicting that the price of crude oil is going to get into the 50s. But I am definitely saying it is absolutely possible, especially if this last high holds. I know, I'm sorry, it's disappointing. You want me to predict the future, and if you've been blowing up accounts and moving your stops and you're not making money and you're incredibly frustrated, you're looking around on the internet trying to find somebody who's going to make predictions, high probability certainties that you can just throw the remaining money at and hope that it works. That's not what we're doing here. We're showing you parameters and trying to give you an edge. So if you're inside the Professor Trades Clubs, you're getting updated in real time all day, every day the market is open. If you're watching my videos twice a week, you're going to get education, but you're not going to fully be able to put it all together unless you're inside the club. So anyway, this is a 3-wave correction after what is ostensibly a 5-wave move down. And I'm trying not to spend too much time on any one thing because I want to cover some other instruments, but I cannot help myself but teaching. See, this is the kind of stuff in the 1-hour Saturday sessions I'm going to be spending. It's going to be purely educational. So I'm going to take the time to break down these things and get it to where you can make these kind of charts yourself. Okay, so that's the deal. Now, that's it. So there's your parameters right there. 68.18 to the upside. That's really the only thing you need to know at the moment. Now, I could drill down and get into the lower time frames here and really give you more guidance in here, but I'm not going to do that. That'll happen inside of the club. Every morning I post, I don't know, anywhere from 5 to 15 charts of different things. Sometimes I'll post multiple charts of different time frames of the same instrument so you can get more actionable levels on the lower time frames. But for right now, crude oil below 68.18, and the door is open and remains open. Now, okay, I don't want to keep talking because otherwise I'm just going to keep going. I could spend an hour on crude just explaining and drilling down, but I'm not going to do that. Okay, so that's the parameter, 68.18 to the upside, and obviously these levels down here, that last low is the floor. So just this red zone is the floor, 68.18 is the ceiling. So you've got roughly a $3 plus window. And what I would expect is this, this can rattle around. This is the middle, right? This is the middle. So until we get out of the middle, either break out or break down, right now my bias is to the downside. And that's it. Okay, cool. So let's move on. Let's look at the dollar. because then I'm going to follow it up with metals. So I'm always looking at the dollar when it comes to metals because they are related, and mostly on the larger time frames, definitely some correlation going on. And sometimes they're correlated, but I just looking at the dollar in relation to metals is just another clue, that's all. Each chart on its own, because each chart has its own Fibonacci, each chart has its own levels, each chart has its own price action. So why would I look at one chart and take a trade on another chart? I'm not going to do that, but I will look at one chart and get clues and compare it to another chart. So with the dollar, it's very, very impactful. What's going on with the dollar is very impactful. So that's why I track it. So if this had held this area right here and then bounced, I was expecting that to happen. It lost this immediate support and is still coming down. Now it bounced again off of this next level of support. So in other words, the market answered my question. I've had this question mark on here for a minute. And the market came down and answered my question. My question was, is price going to hit this support zone and bounce, or is it going to come down and grab this support zone and bounce? So there is still unfinished business with the dollar down here, and what I'm doing, I'm moving this blue zone down because neither of these two bounces, this bounce and this following bounce. Let me enlarge this. I know you guys are on small screens and stuff, so I'm trying to be mindful of that and make this chart bigger so you can see my levels a little more clearly if you're on a phone or an iPad. So this bounce is not big enough for a wave 4. This bounce is not big enough for a wave 4. So shallow bounce, continue lower. Shallow bounce, are we going to continue lower? If we are, if we get below this level in here, just call it 103 or 103.50 down to 103.75, 103.375. If we break this low, I think it's much more likely this is an impulse and this is wave 3, and then we'll get a wave 4 bounce that is commensurate with this degree, which is another way. You could just look at it as time frame. When I say degree, you could almost substitute it as time frame until you fully understand degrees. So in any case, if this keeps coming, this is impulsive wave 3. And you can even see it is a wave 3. It is a wave 3. It's just, at one point I was tracking this as an ABC for wave 3 because we've been trading as if we're in a diagonal. If you've been following me, you'll remember just a week ago I was saying, looks like the dollar's in a diagonal. But because this has not bounced substantially and it keeps coming down, the odds are much, much less that this is actually a diagonal and that this is actually a standard impulse. So that's what the wave 4 box is about. Because if this is going to bounce from here and get contained, it could even come up higher because the length of this wave 3 is quite something. I mean, this is a wave 3 for sure. Look at it. Wave 3 is the longest, most powerful wave in a standard impulse, and you can clearly see that this is clearly the longest wave. Now, on the way down, I had another reason I'm thinking standard impulse is I have wave 1 as a 3-wave move, A, B, C. It is possible that it's just a 1, 2, 3, 4, 5, and it happens to be a diagonal, but it has overlap, but it's not measuring as a 3-wave move. The end result is it doesn't matter. That's academic at this point because it already happened. It bounced. It came up and hit resistance where you would think it would, right near the 618. And look at the reaction to that 618, man. This thing came all the way down. The dollar is totally crapped the bed. And so now what I'm doing is if this bounces and gets contained in this blue box and then comes down again, I'm going to view this. This is wave 4 of 3. In other words, wave 3 should subdivide in 5 waves. As you know, if you're continuing to watch my channel or maybe you're in the club, and you know that an impulse, the internal wave structure subdivides as a 5-wave move as well. So somewhere in here, there's a 1, 2, 3, 4, 5 for wave 3. So the next thing I'm watching is this bounce going to come up into this blue box? And if it is, I'm going to be looking for rejection. And while this is happening, I'm going to be thinking about gold and silver, because I had a bad gold trade this week, which doesn't happen often, but yeah, I did. And that trade was really looking for this on the lower time frame to keep coming down from here. From this blue box is when the dollar was over here, and I was looking for a bigger bounce in the dollar. And when, generally speaking, when the dollar is bouncing and strong, the metals continue to come down. So I was thinking of this as a 1, 2, 3, looking for wave 4 to terminate in here and get one more shove down, just for a short scalp. Small sized, short scalp. Didn't happen. The dollar kept coming down and gold went all the way back up, did a bunch of whipsaw. You know, the deal is, now let's segue right into gold, right, from the dollar. Let's segue. Okay. Before I move for the dollar, let's look at the weekly chart of the dollar, because this is gonna hit home. This chart I haven't touched in quite a while, and I always refer to the weekly dollar chart because Elliott wave on the longer time frames tends to be more reliable than on the lower time frames. Just the same way with candles. If you're trading like a 4-hour candle chart versus a 5-minute candle chart, you're going to have the same kind of idea that you can't trust the lower time frame stuff like you can for the higher time frame stuff. So basically, we got rejected in the zone that I was looking for. I was first looking for rejection at the 100 fib, which we did, but then it came back up. So the next fib is a 1236, and look where price rejected from. Right at the 1236 fib on a weekly chart. And we got rejected. And this is a 1, 2, and here's wave 3 extending to the 200 fib, and now we're getting that tiny little bounce I just showed you. But the idea is, if this dollar is going to bounce one more time and get another low, then there's going to be a bigger bounce, okay? And that could be metals getting their correction one more time lower. And then when the dollar finally really lets go, later this second half of the year into next year, wouldn't that be wild if that's when metals are ripping higher as the dollar comes down here for the next 18 months trying to find support in this blue box way down here? Wouldn't that be amazing? So now let's go talk about gold, since I've talked about the dollar. So what's happened is this is a 1-hour chart. Gold has popped up and is just simply chopping in this range. It did a little range expansion here. It made a higher, okay, first it made a high, then it made a higher high while it was making lower lows. So it expanded this range to the top side, and it has expanded this range to the downside, and now it could not make a higher high, and it has not made a lower low. So gold is incredibly tricky right now because it's in the middle. We don't trade the middle. And you can really see how this is so choppy. This is an 8-minute chart. Look how choppy this is. Now, I had a buy box up here on the 8-minute chart, and I had a buy box down here. And I put those on here way over here. And those levels have proven to be incredibly accurate. And the deal is, I don't say this every time, but I really probably should. Anytime you see a buy box on my chart, especially on a lower time frame chart, really what I'm saying is, if you get a 1-hour candle close, and this is something I learned from Armando, it's so simple and elegant, and it just stuck with me, and I use it every time I put a buy box or a sell box on my chart. You want a 1-hour candle close, or better yet, a 4-hour candle close in these areas before you buy. And what that goes along with is, if you get a move up deeper into any of my buy boxes, in this case, a move like this one, a move deeper down. I'm not talking about a wick on an 8-minute chart. I'm talking about a 1-hour candle that closes in this box. And then ideally what I love to see is when price really comes deeply or even exceeds a box and then back tests the bottom of the box, or at least back test somewhere in the box, and that is where you buy. But you know, that requires patience. That means you would have to let something go into your target area and not buy it, and wait for it to come back and buy the back test. Another way to do it is to stay really small. So if you just couldn't contain yourself and you're like, no, I think this is going higher, so as soon as it touches that box, you buy it without following my suggestion, which is you wait for a 1-hour candle close. But if you're gonna jump the gun, stay really small, because then it comes all the way back. You're not crying as much. I mean, can you take a, what is that? A $20 move in gold? Can you take a $20 move on the wrong side of gold? If you can't, you're trading too big. So always keep your size down in general, and because you can always add later if you're right, and you're not going to get killed if you're wrong. So the name of the game is longevity. You want to stay in the game, so learn how to be consistent before you start adding any size to your trades. Learn how to stay consistent. Learn how to get consistent before you add any size to your trades. Okay, so anyway, I'm just showing you the chop fest that is gold. That's the main reason I just showed you that zone. That whole zone I just showed you on the 8-minute chart is right here on the 1-hour chart. Now let's look at the 4-hour chart. That whole zone I just showed you on the 8-minute chart is this little zone right here. So again, as I was just saying, on the lower time frames, it's much less reliable. On the higher time frames, it's more reliable. So the way I would look at this right now, it is possible that this is a B wave, and it is possible that we're going to get destroyed in gold. And we're not going to get destroyed because we're in the Professor's Trades Club. We're going to be scalping to the short side if this support breaks. If this support breaks and price cannot get any traction to the upside, I'm going to be thinking this is the beginning of the C wave. And so there's a lot of room for this to go lower. But at the same time I say that, there's room for this to go higher as well, a lot higher. Now, this zone up here is an obvious target. I know this is complicated, all this Elliott wave measurements and stuff, but this is a supply-demand zone. Just forget all my markings. Just look at this red zone. This is where price has been in the past a couple of times, could not break out. So this is resistance. So there is a structure that allows for price to come up again into this zone. But if it's going to do that, if price is going to come up into that zone, call it 2970. If it's going to come all the way up to 2970, it's going to have to get above this zone. So that's what I mean by this buy box, getting a 1-hour candle close before I even start looking to the upside. You know, it is amazing. I just was reminded of this. I had an exit. I was scalping to the long side. See, I lost the trade here. I lost. I was wrong, and I got it wrong, and I lost. I stopped out. And then on this pullback, I actually went long, and then took the gains, booked the gains, and then from down here, I went long again. This one I posted in the room, and my exit target was exactly 29.3890. And guess what happened? It did not. It missed that by 20 cents. It missed my exit order by 20 cents. And I wasn't on screen at that exact moment. And I did have a protective stop, and it came all the way down and hit it. So when I came back to the screen and I saw I did not have a gold position, I was excited because I thought it took it off up here. But it didn't. My stop got hit way down here, but it was still profitable because my entry was even lower than that. And that was just a runner because I'd already taken the gains. Look, we do this all day long inside the club, every day. Guys grabbing pips, myself included, almost every single day. I don't remember the last day I had a net loss for the day. I mean, I've had them, believe me, but not recently. even though I have losing trades, I have a lot of losing trades. That's not the issue. The issue is if you size correctly, you can have losing trades. And at the end of the week, and at the end of the month, and at the end of the year, you can look at your P&L and go, wow, who knew trading so small could be so profitable? But it goes with the mindset. They go hand in hand. So you gotta figure that out. Okay, so anyway, really just keeping it longer time frame on gold. That's the idea. Is I know I just basically was saying it might go down, it might go up, but I'm giving you the levels. So if this thing can come up and get above 29.40, let's just say, and get a 1-hour candle close or a 4-hour candle close, I think it is much more likely that we are beginning. That is wave 1 of 5. So, okay, so in other words, if this comes up and gets up into here, it makes another high, ideally, I will consider that wave 1 of 5, meaning this is the low. Now, I'm not predicting that. I'm just saying that's the idea. And, you're why can't I move this chart? Let me see. So this would be wave 1 of 5. So the target for that is like 3130-ish. Certainly over 3,000 for sure. So that's the upside targets, right? And I don't really want to talk too much about the downside other than it's scary. If this doesn't hold, then this is going to be a larger degree wave 3. And this, if this makes it down to here, it's definitely moved in 3 waves. So if that's the case, if this is coming down in 3 waves and it starts bouncing again in a non-impulsive manner, then I'm going to have to say this is another A wave, and then we'll get another B, and this is a longer, more protracted correction in gold. You know, that's just what the fibs are saying. Okay, so that's the deal with gold. It's chopping in a range, and I've got parameters on the upside and parameters on the downside. All right, let's take a look at the NAS. What a overlapping, complicated mess. When I zoom out, makes a lot more sense. This looks like, very much looks like a diagonal, with this being wave 1, this being wave 2, this being wave 3, and this being a protracted wave 4, which did overlap with this price action right here. So yeah, it looks like a diagonal. It's behaving like a diagonal. And so what that means is that any one of these lows could be the low. Any of these lows are in the target box. If you're inside the Professor Trades Club, listen, I am new to trading NASDAQ. We have absolutely been killing it on a scalping basis. Killing it, mostly to the long side, which is wild because this is a massive down move, which we've caught a few of, but lately we've been scalping these long scalps, and it's been amazing. And now it's getting very interesting because this last wick on Friday definitely wicked down. I mean, this has stopped out more longs. You know, I can only imagine how many stop outs have happened with folks getting too bullish too prematurely. But the idea here is that we've been looking for the low for a few weeks now, even though we don't let that, you know, influence our trades. We're trading inside of the Professor Trades Club, scalping, day trading. Sometimes you might only be in a trade, you know, for 10 minutes. And if you can grab your pips, then you're done, NASDAQ, for the day. If you're done, you grab those pips, you're done. You walk away. You don't give it back. So look at these fibs. It did come all the way down deep into this blue box. It did exceed it, but look, it held these yellow fibs with this wick. It wicked below the 1382, and it wicked below the 618, and look at that reaction. And I know the professor caught those longs. So the idea is we could be in for longer term wave 5, which I need to redo these measurements looking that far out. But the idea would be in a diagonal, wave 5 can target the 1618, so that's 23,122. Can you imagine that the NASDAQ, it is not unrealistic to think that the NASDAQ has 3,000 points to run? Can you get 20 pips a day when the thing is going to move 3,000 pips? I'm not saying it's going to move 3,000 pips. I'm saying it's in the realm of possibility for the NASDAQ to go on a bullish rampage from here. I'm not predicting that. I'm saying it's possible. And the way I would think of this is an A, B, and this is a C wave. And the C wave is the crash-like wave of any 3-wave move. The C wave is going to be typically the longest and most powerful wave. And inside of that C wave is the wave 3, which is also going to be the longest, most powerful wave. So have we bottomed? Is that the low? Totally possible. Totally possible. So during the week, what we'll do inside the Professor Trades Club is we'll drill down on these lower time frames and look for clues. This kind of looks like a wave 4. This kind of looks like a wave 4 triangle. So, but I'm not going to get in the weeds in this video. This is an 8-minute chart. So, but you know, the real parameter is this low down here. This, as of right now, just looking at it on a cursory basis real quick, looks like a 3-wave move. All right, so I'm just going to keep it that simple. All right, so that's the NASDAQ. And I'll show you the JPY real quick because this thing, I've been tracking this, and it's really helped on some of our currency pair trades that include the Japanese yen. And the parameters on this thing, I have been consistent with the parameters on this daily chart for quite some time. And we nailed the bottom, nailed it, called it well in advance, nailed it well in advance, got the reaction we were looking for. Now, I don't always nail it. I'm kind of bragging right now, because when Elliott Wave works on a longer time frame, it's just remarkable. Like, how can anybody know and predict from way over here what's going to happen way down here and where it should happen from? But that's what I did, and that's what Elliott Wave does a lot, especially on the longer time frames. I did it with gold for a year. The longer time frame gold chart behaved exactly as it was drawn up, based on Fibonacci. So the short story here is the low held. As long as these yellow fibs hold, now as long as this pivot holds, then the yen keeps coming up. I mean, anything can happen. I could be wrong. That's clearly possible. But in this example, look at this reaction from that area. And then you had a three-wave correction, and then a higher low, and now a higher high. Here's the pivot. As long as we stay above, I've been saying this for a couple of weeks now, as long as we stay above the pivot, then it is in the cards that we're going to come a lot higher. And that is great for pairs like GJ, UJ, other pairs that have the Japanese yen in it that are going to give you nice short trades. This is a weekly chart of the UJ. Look at that. Look at that short trade based on the J. And I thought I had a GJ chart. Yeah, I do. I thought I had one with the... Okay. So there's your GJ. It's coming down still after topping. And there you go. All right, guys. Listen, thanks for watching. I really appreciate it. And if you're new to just seeing me, go ahead and smash the like button, hit the subscribe button so you get these free notifications, free information every week, usually twice a week. And check out the link in this video for the connection to the Professor Trades Club. Check it out. All right, guys, thanks for watching. I hope to see you in the club. And soon we're going to get on those educational videos on Saturday, $7 Saturdays. All right, guys, take good care, and I will see you inside the club. Bye-bye.